Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start with, I'd just like to wish everyone a happy Easter and I hope you enjoy the lovely long break for the weekend. So to round off for this week, the Australian dollar has buckled further to the downside and taking out the support at 76.85 and closing underneath there has given further indication that we should start seeing a further bearish case, with the immediate target coming in at 76.30.35 on the day. From the given break and also the indication from the technical outlook from a weekly, the market is poised for a further move down and looks towards a region of 75 cents as a target. Any advances should find resistance now at 76.90 to 77.30, which is where I believe the market will find fresh selling to return. An interesting price action over the last 24 hours. The US dollar index rallied 100 points and it moved from the low of 88.80 to a high of 89.81. With the index still looking for a further test up, could take on the challenge to 90 or maybe to the crucial point at 90.40, which in terms puts the euro at 121.80 to 122 the figure. Now, I've been harping on this level for a while now, but with the technical implications, along with the strong US dollar returning overnight, could see the challenge of this double top reversal neckline and a break of 121.80 would expose the region of 118 as a measured move. The reason why it's measured move is that you measure it from the top to the bottom, and that gives you the neckline here, and then the break there gives you a move down to 118. On the intraday outlook, the support comes in at 122.70.95, and as I mentioned, 121.80 is major. Resistance seen at 123.55.70. Now, to begin with, I do like to say that there was bullish divergence from this move down to this move up, and from there the dollar yen case has strengthened further and now looking towards the region of 107.30 with minor 0.5. A break above 107.30 would give further indication to the upside and look towards the region of 107.95.05. It is viewed that the dips will be shallow, and for those that are long, I would look towards unwinding either at 107.30 or 95, with 106.45 but firmer at 105.70. The pound isn't showing any bullish implications at this stage, and since the tackling of the 142 region and the rejection, which was seen as the January highs of this year, is looking back towards the downside, and also from the break of 141.30 yesterday has increased the downside potential. Now I'm looking to see a target of 139 figure 5, which is where this neckline comes in. Any advances on the day should find resistance around 141.20 to 141.55. Now trading gold, first of all, we did have a bearish outside range day, followed on from further supply to confirm this negative signal. The support at 40 was crushed, and the market fell a whopping $23. From the fall of 46 down to 23, mainly on the back of this dollar index strengthening, is that the GDP that came out overnight, which is the gross domestic product, did increase by 2.9 annual rate in October-December, a very strong number for GDP, and also beating the expectations of 2.7, with the previous month coming in at 2.5. So it was a good number, along with fading geopolitical uncertainty temporarily for now, which has reduced the appetite for safe haven demand in gold, due to the reports that North Korea leader Kim Jong-un vowed to commit to denuclearize amid talks with China's president. Now, with President Trump also coming back and saying that he received the message and that he is very welcome to meeting Kim Jong upon his request. So we have to see how that all turns out. But nevertheless, there has been a rejection in gold. And this roller coaster ride from 1300 to 1360 is still playing the game, as you can see here, after the market rejects that level. I am looking now down towards the region of 1322 to 1318, but the bullish foundation still seen, as you can see here that I've outlined, around 1300 to 05. Resistance on the day, 1329. Silver outlook, well, it does over the last 2 days remain bearish, and from the technical implications we are looking back to the challenge of this $16.1520. Overall, I do expect to see resistance around 35 to cap on the day, and with further bearishness before the call to actually start seeing buying return. From a technical point, it's also weak. And to round off with oil, well, the market posted a long-legged doji since the rejection of the $66 a barrel. I'm still negative, and I'm still looking down towards 64.5 and lower down towards the region that comes in now at 62.5. Resistance seen at 65.15. Well, that wraps up for today and for the week. Thank you very much for joining me. And as I mentioned earlier, I hope you have a wonderful Easter and a great break to the long weekend.